All right, well, good morning, everyone. My name is Mike Lawton. I am with the Wisconsin Department of Financial Institutions. Thank you, Michelle, for your presentation first. That was very informative. As someone with children who are in that landlord renting age, that's great information to know. I'm here to talk about consumer lending, quick cash, payday loans. With the Wisconsin Department of Financial Institutions, I work primarily over my 22 years with the state in what's called the Bureau of Consumer Affairs. So with that, we handle consumer credit transactions under the Wisconsin Consumer Act. Most predominantly, consumer credit under $25,000 falls under the Consumer Act. Like DATCAP, we also have consumer hotline numbers that consumers can call with questions about any type of credit. We get a lot of questions about credit cards, car loans, these payday lenders that we'll talk about, installment loans. All of that falls under the Wisconsin Consumer Act. I did not bring brochures or handouts, but if you go to our website at WDFI, we have a lot of information concerning consumer credit. Also, consumers can file written complaints through our website. And again, similar to the landlord credit, if there's questions that a lender is not properly administering a loan, or if there's questions about fees, we can review a complaint, contact the company, and do our best to help get the situation either resolved or at least answer to the consumer's satisfaction that they understand what is happening with their account. So again, the toll-free number, the website, I can always circle back to that at the end if you have questions about that. So one of the things that whenever I give these presentations, I'll often go into schools, I'll talk to teachers, we'll talk to listening sessions throughout the state. And one of the questions that always comes up, and that I'll ask young people, does anyone know what the maximum interest rate in Wisconsin is? And it's surprising that the number of people that don't know that Wisconsin is one of the few states left that does not have a cap on interest rates. It is whatever the two parties agree to. It is not uncommon, especially when dealing with some of the payday lenders, to have interest rates that are in the triple digits, to see interest rates in the 200, 300%. Now, these are generally short-term loans. They're not intended for long-term financial relief, but Wisconsin does not have a cap on interest rates. Now, lenders have to still comply with the Wisconsin Consumer Act, like I mentioned, and also other federal laws as well. So they have to conspicuously disclose to the consumer what the rate is. It has to be in writing. The consumer has the option to say, 200%, that's crazy. I'm not going to sign a contract paying that. But if the lender discloses a rate, the consumer agrees to the terms, then you have a valid contract and the lender can charge that rate. Also, as we discuss this, if there are any questions as we go on, please let me know and we'll address them at that time instead of waiting till the end. As I mentioned, one of the consumer protection laws that we administer at DFI is called the Wisconsin Consumer Act. Before we get into some detail of some of the other consumer lending products, I thought I would mention some of the main provisions of the Consumer Act. And as I just mentioned, it requires certain disclosures in consumer credit contracts and advertising. That not only do they have to disclose, what the rate is, but it has to be shown as an annual percentage rate. It has to be clearly and conspicuously disclosed to the consumer. There should never be a question about what the rate is on an interest. And we'll constantly, in that hotline, we'll get calls from consumers that say, well, Mike, they're charging me 36% on my contract, can they do that? They say, well, what does your contract say? And they'll say, well, I don't know. And I'll say, well, why not? And they'll say, well, I didn't read it. Well, we have laws that require them to disclose that information to you, and then the consumer has to take that steps to make sure they read the contracts and understand the terms that they're signing. In the Consumer Act, we also have limitations on what type of fees can be assessed on a contract, especially with closed-end loans, like your a 5-year car loan or something that has a specific set, not an open end with like a credit card. But we have very strict limitations on what can be assessed for additional fees, how much a late fee can be, how much a return check fee can be. All those are strictly limited under the Wisconsin Consumer Act. One thing, and this is not specific credit, but it's always good information to have, the Wisconsin Consumer Act is also what gives consumers a 3-day right to cancel transactions in Wisconsin. Now, one point to remember with this is this does not apply to every transaction across the board. There are 2 specific situations that have to occur in order for for a merchant to be required to give you 3 days to cancel that transaction. Is first, that the initial communication has to take place away from the merchant's regular place of business or through like a direct mail solicitation. And 2, the contract has to be consummated away from the merchant's regular place of business. So if a consumer walks into Target to buy a product, well, the consumer is the one who initiated that transaction. That transaction took place at the merchant's regular place of business. So places like Target that are selling merchandise at their store is under no obligation to give any cancellation rights to the consumer. Where you see the 3-day right to cancel most commonly is like a door-to-door sale. The solar people knock on your door at 8 o'clock at night wanting to sell you solar panels. If you agree to talk to them and sign the contract at your home, well, the solar people are the ones that initiated the contract. The contract was signed at the consumer's home. Both conditions were met, so the company would be obligated to give you notice. They have to give you written notice of your cancellation rights. If they don't give you that notice, your 3 days to cancel that transaction does not start until they give you that required notice under the Consumer Act. Finally, and similar to some of the federal laws, the Consumer Act also prohibits harassing collection practices. Michelle kind of noted some of the common complaints they get at DATCAP. Well, collection practices, whether it's by a collection agency, by a loan company, by a bank, collection practices are always at the top of our list. So banks can call, calling to collect on an account in itself is not harassment, but they can't abuse, they can't use foul language when calling, they can't call after certain hours. That is restricted in the Wisconsin Consumer Act. One thing that I wanted to mention too, vehicle financing, when we talk about, again, rates and terms, and again, I'm going to kind of piggyback on a lot of the same emphasis of topics that Michelle had, the importance of reading and understanding contracts, getting those terms in writing. If a sales rep is going to sell you a vehicle and they start making promises that they're going to throw in floor mats, they're going to throw in this, they're going to do anything to enhance that sale, make sure you get that in writing. With that, again, if you're going to finance the sale of that vehicle, make sure you read and understand the terms of the contract. Again, we have limits on additional charges, but as far as rates, those have to be disclosed. But once you sign that contract, it's a binding agreement. And circling back to the 3-day right to cancel, it's not uncommon for us to receive complaints of buyer's remorse that a consumer went to a dealership, purchased a car on Friday, wants to return it on Monday, and unfortunately, since they went to the dealership and they signed the paperwork, that dealership is under no obligation to cancel that sale, and it's not going to happen. None of them do. So, very important to know that. One thing I wanted to mention too, with additional charges, when it comes to leasing a vehicle, there's a lot of information that has to be disclosed on leasing contracts, but may be unfamiliar with consumers who don't have a lot of experience financing or especially leasing vehicles. There can be acquisition and disposition fees with a lease. You may be charged for mileage where if you're actually purchasing the car, well, you don't have to worry about additional mileage charges because you're not going to be giving the car back. You plan on keeping it forever. Leases don't charge an interest rate, but what they have is a rent charge that has to be disclosed on the lease agreement. And also you can have early termination charges. If you want to get out of a lease, you sign a 3-year lease, and if you want to cancel it after 1 year, it's likely that you're obligated to pay those additional 2 years of lease agreements. Trying to terminate a lease early can be very, very expensive. Couple other items that I just wanted to touch on briefly when it comes to vehicle financing. It's common for dealers these days to sell what's called GAP insurance. That's not technically insurance, but a GAP product, which stands for Guaranteed Auto Protection or Guaranteed Asset Protection. What GAP does is if a consumer purchases a vehicle, oftentimes that vehicle is going to depreciate in value right after they purchase it, or they may purchase a little bit higher than the value of the vehicle. Well, if they were to get into an accident with that vehicle where it's totaled, the insurance company is going to pay off the actual value of the vehicle. They're not going to pay off the loan that the consumer has, but rather the vehicle the value of the vehicle. So if they buy, and I'm just going to use random numbers here, let's say they finance a vehicle at $10,000. Well, as soon as they drive it off the lot, let's say that value of the vehicle drops to $8,000. Well, as they're driving home, if they get into an accident and total the car, the insurance company is only going to pay the $8,000 value of the vehicle. The consumer is still going to owe that additional $2,000 to the bank or the finance company. Where GAP comes in is if the consumer is what they call upside down on their loan like that, what the GAP would do then is the lender would waive that $2,000 difference if the vehicle is totaled. GAP it's expensive. Consumers can also go to their own insurance companies. Many of the insurance companies will sell GAP to consumers versus buying it at the dealership. You know, and it's always good to explore all of your terms, but it's likely that dealers these days will push GAP on a vehicle, or credit insurance, credit life, credit sickness, involuntary unemployment insurance. Again, if you get sick and you can't work, that insurance should take over the payments. Yes?
Who actually determines the value of the automobile?
Okay, so the question was if there is a loss, an accident with the vehicle that constitutes a total loss, who determines the value of the vehicle? Well, the insurance company is going to be the party that determines the vehicle, but they'll also be using that in conjunction with like Kelley Blue Book or the NADA values. So they're not just arbitrarily setting it on their own, but they'll be using the other vehicle condition associations to come to that value. NADA is probably the most common one that you're going to see with that. So again, when we have these discussions with younger people who are in this situation for the first time, making them aware of these, again, stressing to make sure that they understand the terms of the contract. And boy, don't be afraid to tell a dealership no. You know, they're there to sell cars. They're gonna push what they can to get you to buy their car. Well, if it's the first one you're looking at and you're not sure about the price, or you're not sure about the model, tell them no. I'll be back. I'm going to look at some others. Don't let yourself be pushed into a purchase that you don't want to make. Because again, monitoring that hotline, I can't tell you the number of times that I've had a call where the consumer says, Mike, they sold me a car that I didn't want. Well, they're there to sell cars. Once they disclose the terms and you agree to it, you have a binding contract and a valid agreement, and the dealer's under no obligation to cancel that transaction. Some of the other items we wanted to talk about a little bit today, predatory lending, and there is no actual definition of what predatory lending actually is. And this happens whether you're 18 and getting credit for the first time, or you're a senior and experiencing these calls from companies, not just straight up scam artists, but that people are trying to push you into contracts that you want. So sometimes some of the situations that we see that we always advise the people to be aware of or to avoid is if you're running into a situation where you're applying for a loan, and you know, you may see this with probably most commonly with dealerships, but the finance people at a dealership telling you to falsify your information, your income information, so they can help get you to finance that vehicle. You know, if you walk you want to purchase that new car, but you're just out of college, you only have your first job, and you're not making a lot of money, well, it's going to be difficult for that dealership to be able to find financing for the consumer. Well, if they say, well, Mike, if we say your income is, you know, $20 more than it is, or, you know, you make an extra $10,000, we're going to be able to get the financing for that vehicle. Well, misrepresenting information on that application, if they do find financing, but then they find out later that, oh, Mike, you lied on your application, they can turn around and cancel that contract and repossess the vehicle. So again, a red flag to look for if you're looking for a loan and the finance people start asking you to falsify information on your application. They pressure you into applying for more money that you need. You know, if you only want $10,000, but they're trying to push you to get $20,000, well, couldn't you use a little extra money for a vacation or, you know, pay off some other bills? Not saying that that's always a scam, but it's just something to be aware of, something to watch for with what lenders may do. They pressure you into accepting monthly payments that you can't make. Again, this is this common complaint with dealerships, you know, wanting to sell that car. I read an article just the other day where a woman was able to buy I think it was a brand new BMW with $800 monthly payments, but her total monthly income was $600. Well, how is she going to be able to make a payment for that vehicle when that monthly payment exceeded her total monthly income? So again, watching for high pressure dealers or lenders, I shouldn't just put this on dealers specifically, but watch for lenders who conduct themselves this way. And also a definite red flag is to avoid sales reps or lenders who tell you not to read contracts or have you sign a contract that's blank. That's prohibited under the Wisconsin Consumer Act. And again, you always want to be aware of those red flags of dealers and lenders who are trying to push you into obtaining loans. Some other types of predatory lending that we'll see in complaints. Companies may misrepresent the type of credit that you're getting. We see complaints occasionally with home improvement type companies. Well, you know, the windows are going to cost X amount, but you know, we work with a finance company who can help you get this, and you can get the loan and just pay it off in 12 months or 24 months, but the consumer doesn't realize then what they actually signed up for was a credit card, an open-end line of credit, versus a closed-end 12-month loan or 24-month loan. They'll present it in a way to make it look like it's one type of credit when after the consumer signs the deal, it is actually something else that the consumer wasn't aware of, or again, didn't read all of the contracts. But as soon as you see a lender or a sales rep or a finance person misrepresenting the actual type of credit that they're offering, I mean, that should be an immediate red flag, and the consumer should avoid that situation. They promise you one set of terms, but then provide you something else. Again, Mike, we can get you, financing at 1% for this new vehicle, but then when you go to sign the deal, it ends up being 6%, 10%, 8%. Again, if they can't provide what they're promising up front, again, another red flag that the consumer should certainly be aware of. Again, tell you to sign blank forms. I guess I jumped ahead of that one. They ask you to sign a blank form that will be filled in later. Again, that is specifically prohibited under the Consumer Act. No lender should be doing that. And they also say that you can't have copies of what you signed. Again, you're entitled to copies of anything that you sign with any lender. And if any of these situations come up, hopefully that the consumers are able to say, no thank you, walk away from the transaction and move on to something else. So, any questions? Yeah, go ahead.
Do you have to be a lawyer to read these contracts to know whether you're getting screwed or not?
You don't. The question was, do you have to be a lawyer to understand these contracts? And generally, no. Especially when it comes to the terms of the agreement. Again, the annual percentage rate, if you take any contract, a loan agreement that's under the Consumer Act, if you were to just hold it out, the information that shows the interest rate, the payment amount, the finance charge that's going to be added on the loan, that's going to be conspicuous. That's going to be upfront. There has to be, usually it's separate from the rest of the terms of the contract. Most places will have it like outlined in a box, so it draws your attention to it. Some places may actually use a separate piece of paper for that. So a consumer should never not know what the rate is for their account, what the payments are, the total amount that's going to if they pay the contract over the full life of the loan, they should know what that total amount they're going to pay. That should all be conspicuous and easily understandable. Now, sure, you look on the backside and some of the fine print when it talks about governing law and some of the other kind of conditions. Those can get a little technical, but that's not going to be something that is going to be detrimental to the consumer deciding whether or not they can afford the loan, that they can take it out. You know, the rate and the payment, those are the things that are going to be most what they're looking at the beginning of the account.
I hear you in general, but specifically, my daughter just signed a lease with a Honda dealership out of town. And it's a Honda dealership. She's trusted them for years, bought cars there and all that, but she still needs to be diligent at looking at the specific details.
Absolutely, absolutely, and I'm not an attorney, and I read these contracts all the time. So when you do, even when you're looking at the fine print, it's not such legalese that a non-attorney can't understand it. I mean, it'll talk about insurance requirements. Well, when you read that, you can tell that if you don't have insurance on that vehicle, that's going to be a condition of default. There'll be provisions that talk about default. You know, if you miss, 2 payments or, a certain amount, this is going to be a condition of default. Here's what we can do if you do default. So while there's a lot of information in that fine print, it's generally not written in a way that a consumer can't understand it. Now, again, I'm being a little bit generalized here. I mean, you can run into some of the arbitration provisions that get a little wordy or technical, but just her lease agreement, if she reads the back of it, again, she's going to see insurance provisions, default provisions. Does the company assign, well, being a lease, it's probably assigned to Honda's leasing arm. It'll have assignment language on there. If she goes through and reads that, she should be able to understand the information that's in there.
Like Michelle said, communication perhaps?
Absolutely.
And if she overdrives the mileage allowed, that's the same thing?
100%. So the comment was, as Michelle said, communication with the lender, or in this case, the leasing company, is vital. And when you're dealing with, you're correct, the mileage when it comes to a lease, knowing what she has per miles, or oftentimes, for the life of the lease, being aware of what that's going to be, what it's going to cost her at the end, and if she has a right to purchase the contract, let's say at the end. So if many of these leases will have the opportunity for the consumer to buy the lease afterwards, well, if they purchase the lease, then they can't charge you the mileage because you're not turning the car back into the dealership.
She's a smart gal.
Yeah.
Okay? Okay.
But it's all good information to know in advance, right? Are you planning on driving 15,000, are you like Jeff, who travels all over the state giving these presentations? Well, he may want something with a higher mileage contingency on that lease, where someone who lives in town and is only going to be driving locally and might only put 10,000 miles on a year, they might not need a higher, they can negotiate something lower that's more in their terms. So reading the contract, communication is critical with not just loans and leases, but any type of credit, and making sure that they understand the terms.
Unforeseen circumstances. It's 12 hours away. Something happens to me. She's got a back and forth.
Yeah.
Communication once again.
Yeah. Absolutely.
All right.
Absolutely. That's yeah. It is critical. It really is.
Thank you.
Yeah. Oh, you're welcome. You're welcome. So. So again, those are just some of the things that, again, we advise, again, whether young or old, these apply across the board, watching for some of these red flags. Now, one of the things that I was asked to talk about today too were the payday lenders. And these commonly are the loan companies that you see associated with the triple-digit interest rates. These are short-term, high-interest rate loans that are generally secured by a post-dated check or an ACH agreement, an authorization to, if I sign the loan contract today, they'll electronically withdraw the payment 2 weeks from now. At that point, the consumer, when they write a post-dated check, if they take out that loan today, the payday lender is going to deposit that check into their bank account on the date that that loan comes due. So the consumer has to make sure that they have sufficient funds in their checking account on the date that loan expires. Certainly not an effective solution for long-term monetary needs, and that's never been the purpose for payday loans. These are truly designed for short-term use, less than 2 weeks. Again, when you're charging interest rates at 200, 300%, everybody runs into situations where they may need a short-term financial solution. Checks really aren't as much of a thing anymore, but when these things starts popping up, it wasn't common for, I might be at a store and writing a check for one purchase and my wife is somewhere else writing a check for another. Well, all of a sudden we didn't realize we wrote more than what was going to be in our account. Well, many people would use a payday loan to cover that amount and then immediately pay it off, or pay it off within a few days, a week, so you don't have such a high accumulation of interest. Another problem that people would have with payday loans is they weren't just using them for that short-term fix. They weren't using it for just a 2-week loan. They would roll it over. So essentially they'd get one 2-week loan. Well, they borrowed $200 today. Well, in 2 weeks they couldn't pay it off, so they got another 2-week payday loan. 2 weeks later they couldn't pay it off. They got another $200 loan. And you can see after only a few weeks, after 10 weeks, getting a $200 loan at 500%, they've paid just as much in interest as they have for the amount that they borrowed. If they were able to put that funds on a credit card at 12%, if they did just a cash advance on a credit card, they're paying less than $5 in interest charges. An installment lender going to a loan company, they're paying about $15 in finance charges over that same period of time. But obtaining a payday loan at 200% in this example, or I'm sorry, it was 500%, after only 10 weeks, they've paid just as much in interest as they have in the amount that they borrowed. So not only do they owe $200 in interest, but they still have to pay back that $200 in principal that they borrowed. And that's the problem that many people will run into with these payday loans. So I'm going to back up one slide. So back in 2011, there were actually some new payday rules that were put into place that hope to curb some of the issues with payday loans. There is no rate cap still. However, payday lenders are only allowed to roll over a payday loan once. If a consumer is not able to pay a payday loan, at the maturity date of that loan, they have to offer the consumer a repayment option. And with that, they're limited to charging, I think it's 2 3/4% per month on that loan. So the rate drops drastically in an effort to allow the consumer to repay that account. So you hopefully don't have that situation where, okay, well, if I don't have $200 today, in 2 weeks, I definitely don't have $250, but after that 2-week period, instead of having to roll that over, the consumer now has a repayment option at a much reduced rate, and they have to offer it to be repaid in 4 installments. So the consumer doesn't have to pay it all in one lump sum. They're able to pay it off over 4 installments that coincide with the consumer's payment schedule for their employment. Another type of interest that another product that we see, actually I have this up here. So the consumer rights on the payday loans, like I said, I didn't have to back up. If the consumer fails to pay, they have to offer a repayment schedule at 2 3/4 a month for the repayment plan, repaid in 4 installments. The lender is only obligated to provide this once every 12 months. So if the consumer were to get another payday loan, let's say 6 months down the road, and did not pay, the payday lender wouldn't be obligated to give this type of repayment option, but all of them do. We don't run into situations where the payday lenders generally don't offer this. I mean, there may be situations where they don't, but most of the ones that we see do provide the repayment option for all of their payday loans. The consumer can only roll over a payday loan one time. They have the right to cancel a payday loan within 24 hours at no expense. They can just come back within 24 hours and repay the principal, and that loan will be canceled. If a consumer fails to pay back a payday loan, the lender cannot garnish wages to collect those amounts. They can still go through collections and go to court, but they are not allowed to garnish wages. There's also a cap that we placed on, I shouldn't say we, the state has placed on payday loans that caps the amount that a consumer can borrow at $1,500 or 35% of their gross monthly income, whichever is less. And we also developed a guide to payday loans that every time a consumer takes out a loan, they have to get this information that explains their rights, rules and regulations following payday loans, and they have to get that every single time, whether they take out a loan today, pay it off, take out another one in a month, the lender has to give them that information every time. Last one, similar to payday loans, Wisconsin sometimes has auto title lending. Now again, this is separate from installment lending that can be longer term, but it's very similar to payday loans where the title loans, where the payday loans are limited to 90 days is the maximum length that a payday loan can be. Auto title loans have a maximum length of 6 months. These also have high APRs, generally again 300 to 500%. One thing different with an auto title loan versus a payday loan is you're now using your vehicle as security for a vehicle. So if you fail to pay back a loan, they can now actually repossess your vehicle for that loan. A payday loan, if you fail to pay it back, well, that's unsecured. There's nothing the lender can take physically from you to repay that loan. But when you're securing a title loan with your vehicle, the lender would have the right to repossess if the consumer does not repay. These were banned for a short time in 2011, but restored. And many of the consumer rights, very similar to the payday loans. There's a 24-hour right to cancel period that's provided with these. There is a repayment option with these. There's limits on how much a consumer can borrow. It's 50% of the value of the vehicle, or now I'm blanking on the top end of the amount. But there's limits on how much a consumer can borrow with a loan. So that way they're not overextending themselves from the very beginning and not having a chance to repay that account. Now, one thing that we've seen that I'll close on real quick is with the restrictions that we have on payday loans and auto title loans, we actually have very few true payday lenders and auto title lenders in the state anymore. Most of them have gone to a traditional installment loan model where they can lend beyond the 90-day restriction with payday loans and the 6-month restriction for title loans. They just end up making long-term installment loans. So we only have a handful of payday lenders left, and it's less than even 5 title lenders. So we don't see many of those in the state anymore. But it's important to be aware of those. And again, as we stress to consumers all the time, know the terms of the contract, read what you're signing, understand the interest rates that are associated with that. Can you afford this going forward? Making those steps, being aware of those steps ahead of time certainly will save problems down the road. So, and again, if there are questions about the accounts, consumers can always give us a call. We can talk to them. If a complaint is necessary, they can file that with us. We can work with companies similar, again, with DATCAP and the companies that they oversee. We can work with consumers and merchants to try to get situations resolved, answer questions, and go forward from there. So with that, are there any questions that I can answer? Yes?
I have a granddaughter, too, and one wants to buy a car and the other one wants to buy a home. So where would I get some pamphlets for her?
Okay, so the question was that you have some grandchildren that are looking to buy a vehicle and to buy a home. Again, I did not bring pamphlets, but if you go to our website, which is wdfi.org, we have information on vehicle financing, also vehicle leasing. We do regulate mortgage companies as well, so we have information on mortgage lending out there. So if you go to wdfi.org, that has a lot of good information. On the federal level, the HUD.gov, has good housing information as well. The Federal Trade Commission has good information on lending. Now, the federal agencies they're not going to be specific to Wisconsin. So maybe starting with WDFI is the best first place, but the Federal Trade Commission, the CFPB, which is consumerfinance.gov, is a fantastic resource. Consumerfinance.gov, and that's the website for I'll give you the abbreviation first, which is CFPB, which stands for Consumer Financial Protection Bureau. They have a lot of great information out there. Any other questions? And again, I can give that to you afterwards as well if you want to make sure you have that. All right, thank you very much. Appreciate it.
Thank you, Michael.
You're very welcome.